Can Apple save the market? Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market update for Tuesday, the 24th of July. So that's the question we're asking ourselves today. Can Apple save the market? After the close today, Apple reports its earnings for Q2, and expectations, as always, for Apple are very high. Should Apple meet those expectations? We think it's going to be a negative for the market. Should Apple exceed those expectations wildly on the upside, I think it'll give a temporary bump to the market, but I think that'll be it. And I think we'll see the market come down. People are just not buying iPhones, the present 4S model. They're waiting for the iPhone 5 to make its debut. It may come out later this year, so we'll see. But cyclically, we see the general market under pressure and to the downside for the balance of the year. So let's go take a look at the markets. We're going to be looking at Apple, of course, and some other markets. But let's go to our portfolio manager. And we'll start off with the S&P 500. You can see that's down on a lot of pressure today. It's down 1.2%. And if you remember, we were looking at this market and we were saying the cyclicality of the market was quite amazing. When you look at how we've had these highs, we pointed this out some time ago. It's like every 10 or 11 days, 10, 11 days, you make this high, and then you have this pronounced down, down, down. Now, the question is, how far are we going to go down at this time? Now, obviously, we're getting some very, very key areas here. And I think longer term, we could see this market go lower. And by what I mean by that is if we clear the screen and we go to scope out this market, take a little bit more of a bigger view, let's say. And let's say we do a max. And we clear the screen just to make a very simple line chart. And so let's just do a daily. We'll take off all the studies we have, the Donchian trade channels. You see how easy it is to take these studies off? We'll take off our monthlies. We'll just do a simple line chart. And this is what I was looking at earlier, and this is what I think could be the real problem for this market. So let me just draw this in, sketch this in. And right here you have a low here, a low here, a low here, and there's a projected low that comes in towards the end of the year. Now the question is, this momentum is just really sort of beginning to fade out, and if we see this market take out the recent lows, we've mentioned some very special levels on our report today, so please take a look at those. But certainly the 1350 is closing below that, breaks a very short trend line like right here, and if we take out that level is another, I think 1334 is another major level. In fact, let's just clear the screen and go right now and take a quick look there. But if we break that level, then I think we've got some serious downside to go. So the level we're looking at is right this previous close here, which was 1334.76. We're currently trading 1334.79, right on the money there. If we close below that level, I think this is what's going to happen. And it's very, very simple. You've seen me do this pattern 100 times, thousands of times before. This would be a double top. So this would be a double top. And this would be what we call a pivot point. Now, if we close below that level, you can measure from this area here to this area here. So just blindly, we'll say that's 1375 on the upside and 1334 on the downside. So let's call it 35. So it's 40 points from this level. It takes it right around this area here, the 1290, 1295 area, so 1300. So that should be sort of like a target zone for us on the downside. So let's see how the market works today. It's Tuesday, of course. We've got some other reports this afternoon. We've got Apple, of course, coming out. And also we have Facebook also reporting this week, some other earnings. But it seems to me on the top line, a lot of companies are missing. On the bottom line, they may be making it. There are exceeding expectations. But the top line is also very important in my mind. So let's clear that screen. And let's take a look at Apple, which has been a really interesting stock of late because it really hasn't gone. I think it's been somewhat of a disappointment for a lot of bulls, even though it's been a phenomenal stock. Please don't misunderstand what I'm saying. It really has. We sort of gotten into this area here. Let me scope out to 6 months because I want to show you. If we've got certainly right now in Apple, there are some areas that are going to present some resistance, one of which is right here. So the first area is the 620 area. The next level has got to be this 640 area. Those are the two barriers this market has to go through. Now, if we get a blowout session and boom, we go up like this, then clearly this is going to be looked at some sort of form of a base. I'm not so sure with the current mentality, the current psychological aspects of the market, we're going to see that happen today. We are in a bull market, remains in Apple, which is interesting. And if we take that off the screen, we'll put our trade triangles on. You can see our trade triangles have been long Apple from $355. Last signal we had on the weekly is 576. And excuse me, now I think you have to protect yourself probably right here below the 570, 565 level, somewhere like that. If it goes below there, then I think we'll see a little more pressure. But it should be a very interesting afternoon later when the market closes and to see how Apple does. So let's go on to our next market. I'm just going to take a sip of water. And you can see that we're looking at the crude oil market. The crude oil market has come down from where we expected it to come down. That was pretty much like a Fibonacci line. And you can see our long-term indicator is still short from 97.59. We're currently trading at 88. Let's put our couple of studies on. We like to see the Donchian trade channels and also the parabolic. And two of those things you can see right now have actually, we'll scope it in even closer. You can see that when we move out of the Donchian trade channel, we mentioned this last week, we always tend to come back in, and we always tend to come back to the center point. Here's a good example. We moved out right here, and we moved right back in. So we moved out, we've come back into the center point. I expect the market to really consolidate between 86 and 88, depending on what happens to the world markets and demand, of course. We may see this market even drift lower. But generally speaking, the longer-term trend for crude oil still remains down in our view, and only the intermediate-term trend, which we've seen from 87.23, is positive. Right now, with a 55, it's a trading range for this market. So let's go on to the Dow. Dow is under pressure. As you know, it had a nice recovery yesterday, but look at it today. It's not acting well. The previous low close we saw here in the Dow was 12,492. With 12, the low today we're seeing is 12,545. So this is definitely an area we've got to pay close attention to. So we're only maybe this is not going to be a good close if we close down here. So let's see how that plays out. You can see we sort of had the cyclicality. We talked about that. It's just sort of rolling over to the downside, and I think that's something to definitely take a look at. And the other thing we can do is just looking at the Dow stocks. I can go back to my portfolio because I have all the Dow stocks set up. There's the Dow 30. And you can see if I just do a score like this, you've got more reds than greens. In fact, we have no green 100s. We have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 out of the 30 stocks are in strong downtrends. So that's something to really pay attention to. So let's go to our next market is the euro dollar, trading at 120.56, currently minus 100. And if you remember, we've been negative on this market. We've got a target zone of 120 to 117. Clearly the action today is very, very negative. And I can't, it's like everyone is just waking up. This problem in Europe is not going to go away. You cannot just sort of put it besides and not think about it. It's going to affect everybody. China and the U.S. are going to be infected by Europe. You can't have a huge global economy and not have a major sector of that fall off the cliff and not affect the other sectors. It just is not possible. So this market is clearly on the downward trend. We are short, as you can see, from 139.69. This shows you the trade triangles really work. 124.06 on the weeklies, and even on the dailies at 121.90. So we've had a lot of really good action here, really nice profits, and this market looks set to go to the 120 area, which is a big handle for this market. Let's go on and look at the NASDAQ. NASDAQ is still in a very, we think it's in a negative mode, and clearly yesterday's action, boom, you're back down again, not looking good. Obviously, Apple will be a strong player in this market if it comes out with exceptional earnings, but nonetheless, the lowest close we've seen here is a close of 2,865. We're 2,866, so we're right on this low close. If we close below there, I don't care really what Apple comes out with. That's a negative, and it's going to indicate lower prices because that'll be a pivot point and a double top. So let's see how that plays out later today. On the Forex side, the gold is like watching paint dry. It has gone nowhere for the last 2 weeks. However, all of our trade triangles are negative, and you have to respect that. You have to say the overriding trend in this market is on the downside. So let's go to our next market. Is copper. Copper, which had a little play on the upside, topped out. It's down towards the lows of its Donchian trade channel. It is oversold. Support has come into this market right around the 330 to 335. I think we'll see some support coming into this market. But right now, the trend is your friend, and it's a minus 90, showing all indicators are negative. So trade accordingly. Silver, much like gold, is really like watching paint dry. However, this market is drifting lower, lower, lower. I'm not excited about silver, buying it. Don't buy something because it looks cheap, because it looked cheap, quite frankly, at $30, and now it's $26. So only buy when the market makes a turn. It makes sense. So here we are. We're short from $29.98. The market is 26.86. So we've got nice profits in there, almost 3 cents, so over 10%. Now on a leverage basis, that's about 300% return. So let's go to our next market. That's the Reuters Jefferies Index. This market is sharply lower today because of the grains, because of the markets. It's like everything risk off. And here we are, minus 55, trading range. However, the intermediate term trend in this index is up, and the PSR, which we talked about yesterday, is now negative on this market. We're getting oversold, of course, but I would expect we'll come back to the midpoint of the Donchian trade channel. That would take it around about the 287 level from where we are right now. That's where support should come into this market. So let's go on to our other markets we're going to be looking at today. We've got a lot to cover. We're going to look at wheat. As you can see, it's down 48 cents, huge move down. And if you remember what we were saying yesterday in this, you can see we actually were making that there's a negative engulfing line. We talked about a dark cloud cover, remember that? And also a confirming dark cloud cover signal here. And of course, boom, you're down today. So we're getting close to the midpoint. Major trend is up. Let's see if it consolidates from here. We're now very oversold. A lot of liquidation coming into this market today. Everybody went through the same door at the same time. Let's look at corn. Corn, you've seen all the news, everything else. Again, dark cloud cover, confirmed period. Now we're looking for this market to go down to maybe the 720, even the 710, even the 7 level. But right now it's a plus 85, meaning the major trend is still up. Look for this market to consolidate and still go higher. That's our feeling on this market. We've done extremely well. If you're following our World Cup portfolio, which will be issuing the results very soon, it's knocked it out of the park in these grains. And that's the 3 major components of the World Cup portfolio: corn, wheat, soybeans. And the others are gold, crude oil, and euro. So let's go to our next market. And soybeans, again, boom, huge move down. What's interesting on the PSAR, you had a signal yesterday on the PSAR. So it's really showed you, gave you a nice warning yesterday. Again, dark cloud cover, confirmed, boom, down. Look at dark cloud cover. Some of these engulfing lines are very, very important, particularly in the markets as they pertain to those markets. So let's go to our next market. This is Morgan Chase, JP Morgan Chase. Boop, higher, midpoint. I think we've run our course there. I think we'll see this market on the defensive for the better part of the week. Citigroup, not looking good at all. The lowest close we've seen in Citigroup is 25.26. We're currently trading at 25.09. That's a new low. That's not good. And I expect we'll see it go down to the 24.86 level. So I think we're going to challenge this level here. So negative, negative, negative on this market. Minus 100 tells you the story right there. Moving right along, Bank of America, BAC, same thing there. Negative. We had a little rally yesterday. We closed at 709. We're currently trading at 702. It looks like it wants to go lower, and there's no reason why it won't go lower because we do have a minus 100 in this score for Bank of America. Wells Fargo is the only bank we really like, and we don't like the banks anyway, but if we had to choose one bank to buy, it would be Wells Fargo, but we want to choose that bank but sell something against it, another bank. We've talked about that last week as well. So let's see how Goldman Sachs is doing. They're up today, actually showing a little bit more of a performance, but you can see this area right here, this line that we have, which goes around the 91, about the 91 level. It's like a good support right now for this market. So let's see what else we've got here. Morgan Stanley, very negative there, very negative action in Morgan Stanley, and that looks like it wants to break down below these lows that we see right here. That low that we saw on Morgan Stanley was 1226. We're currently at 1250, so very close to that. We break through that, then we're going to see this market go a lot lower. So next market is FAS. It's a directional ETF, and you can see we've traded as high today as 2665. 2465, I beg your pardon. The high yesterday was 2470. So we're getting close to those previous highs. We may actually take them out today, but we think this market is going to go higher and test at least the top of the Donchian trade channel. Now on the SDS, which is the next, it's a pro short, ultra short, 2 times leverage. Big day today in this market. This is the level we're looking at. This close here was 1621. We're 1615. If we close over that level, then I think we made this double bottom and a pivot point, and we're going to go higher. So meaning stocks are going to go lower. So I think we've covered a lot of stocks today. That's the last one we're looking at. Hey, I'm Adam Hewison, but maybe just let me remind you, the last thing I want to say, how about Market Club, one-on-one Market Club coaching? Is it right for you? I think it is. Give us a call. It's a free consultation, nothing to lose, 877-219-1482. Hey, I'm Adam Hewison from Market Club. I'll see you tomorrow, same time, same place. Thanks for viewing.